Good afternoon, everybody. Welcome to the TraderMerlin show for your Friday, the weekend edition. Hope you all had a fantastic day, another day with all-time highs. As you saw my graphic for today's show, I was playing around with different AI. I was like, you know what, give me something I want. Price chart soaring into the clouds, making all-time highs. Unfortunately, it didn't make the chart look really bright here. I was hoping for like a darker graph, but very symbolic of what we've been experiencing with our tech market. Things just ripping to the upside, and we'll talk a lot about that today. I did have a question on how do you trade that, which is an interesting question. And of course, as usual, we will take whatever viewer questions come our way. So I'm going to start things off with Mike's comment. He says, hey, Merlin, are you taking all bets against the Niners today? You know, I'm a huge 49ers fan, so not like I say I'm going to take all bets. Certainly, I don't want to get too crazy in my... 1 second, I have an application here I need to close out real quick. Hold on 2 seconds. They're going to keep messaging me, and I want to make sure that one stops pinging. Yeah, I will take bets. If you guys want to do a wager, that's fine with me. I'm happy to. It's fun. Adds a little extra skin in the game. Here we go. Let me close this Teams. We will end that task, and hopefully it doesn't crash my whole computer. There we go. Hopefully that is done. Okay, so yes, if you would like to make a wager, I'm happy to make a wager. Let's do it. Let's have some fun. Of course, I will be picking the Niners, and you can pick the Chiefs if you like. All right, let's see. What do we got? First off, cheers. Happy Friday. I'm so glad when Fridays come rolling around. It's just always that little exclamation point for the week. And even though I had one bad trade, which really wasn't that bad, that triple Qs, my other stuff was doing rather well. I missed a couple trades this morning, which is unfortunate. I was trying to sell some puts again on Expedia. I don't know if you guys saw that, but Expedia's not going anywhere. They were down 20% at one point, and I had my order in, and I was literally 1 penny away from getting filled, and it ripped up against me. So there we go. Phillies fan here, but I'm 100% rooting for that. Yeah, it's Kenny. It's not the Niners. It's really Brock Purdy. He's like one of the best success stories you could imagine. It's just a feel-good story. Now, how do you not cheer for that guy? Anyway, Tomasino, you have a Brock Purdy jersey, right? Didn't I send you a Brock Purdy jersey? You're ahead of the curve, girl. Ahead of the curve. All right, well, if you want a wager, let me know. I will happily take a wager with you. We can do fun stuff. Doesn't have to be monetary. We can, whatever you want. You guys let me know. Okay, without further ado, let me continue on to the show. There is actually one thing that I saw, at least to finish up this week, that has me kind of rubbing my hands together going, okay, here we go. This could be something big, and I'm going to see if you guys have any idea with it. Let me know. You saw the 125s and Expedia got paid 167. Yeah, I had an order in to do. I had to do the March 120s, and I was getting my order was for 190. And it's funny because it printed 189. It didn't print my 190s, unfortunately. Let's see. Let me go here, and now I got all kinds of stuff. If you have at the end of this week, go ahead and type in a chat what you thought was one thing that take away from this week that you're saying, I'm looking forward to this next week. This could be something big for next week. I will show you mine at the end of this. Let me get rid of that Niners logo so I don't distract you guys from the core matter, which is trading and investing today. Let me do a thing and start at the bottom and work our way to the top. Top 8. Here we go. Speed round. If you look at the gold chart, again, I got nothing here to say about gold. Tom, I mentioned this to you. I'm pretty sure you're probably pulling the trigger on this one, or you should be at least. You've got a great range-bound market going on in this gold market. Anybody who's doing spread trades, this is one of those ones that just will keep paying out until it doesn't. So I think you're good on this for a while. For sideways action on gold, today we were down just a hair. Nothing really that exciting. You're dead center of that range. So great for you guys that like to trade range-bound markets. Next. Dollar index. I'm going to come back to this. There's a couple things I want to talk about with this dollar index, but I'm looking at this dollar index. We came right up to that level we talked about, which is 104.50. We hit it, sold off. I expected there to be a pullback, and we talked about that on earlier this week. As we hit that level, said, I expect it now to pull back and maybe come down towards this 200 period moving average or that previous area of demand, which is right there. I'll get rid of that line. All in all, there's one other thing here I want to show you. So I was asking you guys to type in something that you think would be kind of a takeaway for next week. Here it is for me. And I look at it, I like looking at weekly charts, but you notice that you have this topping tail into overhead supply, and then all of a sudden we finish with a shooting star after a colossal month and a half up for the dollar index, right? So the dollar index from the bottom here that we achieved, let me get my snap mode in. From the bottom we achieved in December to where we are today, right now we are up 3.44%. Again, doesn't seem like much when you look at Bitcoin up 4.68 on the day, but this is huge from a percentage perspective for a currency. So I'm looking at this dollar index right now thinking you've got a pretty good possibility of downside move next week for the dollar index. Right now it's at 103, or the low of that is 103.96. We're at 104.08, so still a little bit higher. See what happens when we open up Sunday night and get into Monday morning's trading session. If we open up above that 103.96 mark and then start trending below it, I think you'll have a short opportunity in not only the dollar index, but a long opportunity for the equity indexes. So keep an eye on that one. That's my my weekly chart there that I found the most interesting. Now, most of the other charts look like this. Ripping to highs, closing at almost the dead high for the week. So no big deal here for the S&P, which trucked up another 0.49% for the day. On the week, I guess I'll give you weekly numbers here as well. If we go back to last Friday's close to where we closed at today, a 1.24% jump for the S&P, which, you know, as it breaks to an all-time high, typically those moves are much more dramatic. So 1.25 is really not that big of a deal, but it is going to all-time highs and will continue to do so until it doesn't, which is a question I got from one of the viewers. What does Tom say? It's official. They are canceling the game that cannot be mentioned, but they are keeping the halftime show and adding 3 hours. So here's another funny one. Did you guys know that if you go back to so here we are in 2024, we have an election year, which is going to have Donald Trump versus Joe Biden, most likely, unless something dramatic changes. And you have the 49ers and the Chiefs in the Super Bowl. If you go back to 2020, you had Joe Biden versus Donald Trump for presidency and the Chiefs and the Niners in the Super Bowl. So I'm hoping for a different outcome with the Super Bowl, right? The presidency, whatever, it is what it is. I don't hang my hat on that one. I have more of a personal joy in watching the 49ers win this time because we gave the Chiefs the game last time. If Don Fran is in here, you know you are. We gave you the game by not running the ball. Stupid coaching mistake. Anyway, I'll leave it there. I thought that was pretty interesting what happened there. Not after yesterday. What did I miss, Big Eb? Is one of them out? Okay, let me go to finish up our top 8, and then we can just kind of go in any direction we want. Crude oil. So crude oil had a little bit of a pop today. Like that. It's actually been a pretty good week for crude oil, but notice where we're coming into, that 200 period moving average on the daily. Now, I don't usually leave the moving averages on there. It's more of a distraction to me. We also did have the plandemic. Let's hope we don't get another plandemic this time, Larry. Ugh, man, that was ugly. Groundhog Day. Yeah, I want a different outcome, Liz. I want a different outcome this time. Niners going to win this game. I think we're going to win by about 14 points just because our defense is going to step up, keep Patrick Mahomes in the pocket, and then put pressure on him, and it's done. He's over. Anyway, here's your crude oil chart. Now, I talked about this a couple weeks ago where I like the fact that it's now making higher highs and higher lows. Now, we came screaming back down into it on Monday. But we didn't break this low that goes back into January, into early January. So that's a good sign, even though it was a pretty pronounced sell-off from the 29th of January through February 5th. It didn't make new lows, therefore it's still okay. So what will be interesting for anybody here who's bullish on crude oil, and I am in that camp, I am bullish on crude oil, is you got to get above this high we established on January 29th. If it doesn't get above 79.29, you're still going to have some challenges as far as moving up goes. So once you break that, though, I think you get some pretty clear steps. We'll quick up to about $81, and there's some other supply zones we'll look at a little bit later on. But all in all, I am bullish on crude oil again. You know, we bottomed out. We had that hammer formation we talked about on Monday. I hope some of you took that trade. I mentioned if we break above this 73.28 line, there's a good buying opportunity for it, and it's been ripping ever since. So nice move up there in crude oil. NASDAQ continuing to put on a show, and holy cow, NVIDIA. Like, really? I mean, unbelievable what's going on with NVIDIA. Anyway, here is your NASDAQ, up 0.96% on the day, closing at 18,039. What else can I say here? It's just everything's going to keep going up until it stops. And the question is going to be, I think on all of our minds, is what's going to stop this? At this point, it just seems unstoppable. You can point at bad economic announcements or data. You can focus on bad earnings for some of these companies, which we're far and few between. But all in all, money's just going to keep pouring into these for the foreseeable future until it stops and goes the other way. Now, the way it always seems to work in my experience, going all the way back to the peak of 2020, was, again, when everybody expects it to keep going in one direction, that's when it reverses and does so aggressively. So the more that this does this, and Big Eb, this is to you, my brother, you've got a lot of big tech positions that have some serious gains from those October lows. I remember you're talking on the show here, you're saying, I think we're going to have that Santa Claus rally, the end of year surge, here goes the markets, blah, blah, going all-time high. You nailed it, and you're killing it on those positions. If I'm in your shoes at this point, I'm moving my stop loss up higher and higher and higher to prevent, giving back a big chunk of this. Because as this thing keeps moving, at some point you're going to have a big down day. Like, we're all going to come in one day, probably the next week or two, and go, oh shoot, man, wow, we're down 4 or 5% on one day. It feels like it's setting up for that. Here, I'll show you the chart of NVIDIA in particular. Right, NVIDIA's chart is just unbelievable. If you look at what the NASDAQ and S&P have done since the October lows, you're looking at 23, 24%. Well, you're at 52% for NVIDIA, right? This is the one that's just ripping to the upside, and congrats. I mean, it's awesome being in that, but I hate to see you give back a big chunk. And you don't have to, I'm not saying put your stop loss, right on the low of today, but maybe give it a week or so. Maybe go back to the 664 line and say, hey, I'm giving it 80 points of movement. But I would keep tightening that thing up. You know that things don't move up like this for an extended period of time. This is driven by optimism right now. I was kind of hoping we'd see elevated volume surging, but if you look at the chart of NVIDIA, volume really hasn't increased much, which tells you people aren't selling. That's the bottom line here with NVIDIA. It's not that you have all these new buyers. It's not like there's a ton more buyers. It's just people aren't selling. They're holding their NVIDIA shares, and at some point you're going to get some profit taking on NVIDIA, and that could cause this thing to move down pretty quickly. But it has been just absolutely phenomenal chart for NVIDIA. Congrats to all of you who are in that one. What else do we have? Let's go back to Apple, which was not at all-time highs. Remember, we talked about Apple kind of becoming, just feel like it's floundering here compared to some of the other Magnificent Seven stocks. You got Netflix, which is almost, you guys notice there's a red line above it? That's when Jim Cramer said to buy, buy, buy. So what'll happen is as soon as that thing gets above $597.46, Jim Cramer's going to go, see, I told you to buy. It's like, hey, yeah, donkey boy, you told us to buy back here on January 3rd of 2022. So we had to wait 2+ years for it to get back up to profitable above that. That's opportunity cost and wasted time. So thank you, Jim Cramer, for your wonderful advice in screwing over the average retail investor. Anyway, that's one of your other FANG stocks. Let's look at Meta. Not only has Meta been on an unbelievable uptrend, but that huge gap on earnings, and it's holding the gap, which is interesting. Typically when you have something like this, when you have a giant gap up like that, it's driven with greed in mind. And once it starts to fill that gap, you can get a real quick close. So I've been keeping my eye on Meta right around that 453 mark, right? If I get a close below 453 or even tiptoe across that, I'm going to be opening up some short positions on Meta. I know it seems crazy to go counter trend, but again, I'm going to wait for it to confirm it's filling the gap before I do. You also had Google. So Google certainly had a great run since those October lows, but that earnings did not help, although it's kind of erased that sell-off from their earnings. Microsoft as well, phenomenal run. Going back again to the same basis point we've been talking about, which is those October lows, Microsoft is up 35%. So NVIDIA, definitely the big dog here. Yeah, PLTR, that was a great one. I was kind of surprised that this thing held as well. Not only did it held, but it just kind of kept on rallying here. So Palantir doing fantastic, but I'm a firm believer that this is driven by hype. It's driven by media and headlines and news articles and how great Palantir is. I would not be surprised to see there be a pullback to the downside on this one, but I'm not going to be shorting Palantir. I heard Gavin Newsom is the... Is he? I own the 675. Okay, good. At least you got some protection on that big gap, and that's the important part. Yeah, well, you own them. It's okay. It's an insurance policy, right? You have a small price to pay for an insurance policy that will protect a lot of those big gains that you have. So, when it comes towards fire season, it's important to have fire insurance in California, and it feels to me like NVIDIA is getting near that fire season type of environment. All right, let's go up our list. We're almost there. I'm almost done. So here's our 10-year. And I've got this trend line. I've left the trend line. We have a downtrending line and overhead supply coming up. So more challenges for the yield going forward for sure. It was up 0.55% for the day. Actually, a nice gain on the week for the 10-year, right? Yields are definitely much higher for the week, which is interesting because you had the 10-year was up, the S&P was up, the NASDAQ. We're getting a disconnect in these historical metrics that kind of keep our markets moving, which is bonds move the opposite of the equity markets. Well, not this week, folks, and we'll see if that returns to normal here soon. Second place for the day, you had the Russell 2000, which came screaming right back up to this little area where it had challenges before, right around 2030. Looking great for the past 4 days, that's for sure. But does it get through this high? I'll put a line across there so you can see those exact numbers. And there it goes. Right around 2025 is your next major challenge for this one. But been a great couple of days. And I mentioned, that when you have the Russell showing weakness, it's one of two things is going to happen. If it's weak compared to the major indexes like the S&P, NASDAQ, and Dow, then it's either signaling that the market is expecting to drop and it'll roll over and follow the Russell, or the Russell's out of whack and it will now revert back and start following the major caps. That looks like what's happening right now as you've seen that surge over the past couple of days. Yeah, let me check out the Palantir again. I knew it had something way back, but I didn't. Yeah, there you are. I don't know if I would call that a supply zone if you're looking right where these two little lines are. You're talking on Palantir, it's going to the origin of this gap. For me, I'd really want it to be where the move started, which is up more around 26.50, 26 bucks to 26 and a quarter to about 27 is that supply zone for me on Palantir, which caused this gigantic move down. Of course, that was on earnings. All right, we saw that happen on earnings and just really was, man, what a crazy chart. Had that earnings beat back in November of 2021 when it was right around 27 bucks, and then it missed that earnings. It actually beat earnings and fell all the way down to 9 bucks. Wowzers. Crikey. All right, and the big victor on the day, Bitcoin. Continuing on, and this is a really good sign. I've mentioned countless times on this program how I believe that candlesticks are a window into the mind of the buyers and sellers. They're psychological, think of it like a thermometer that's telling you the temperature of the markets, how excited they are, how hot, how cold, what the buyers and sellers are thinking. And you can gauge a lot by not just one candle, but stringing them together because you can see the sequence of emotion. If you look at what happened here with Bitcoin over the past month, let's go back into January and get into the tail end of January. You had Bitcoin selling off aggressively off of the release and announcement of 11 spot Bitcoin ETFs, right? It was the buy the rumor, and the 11th was the sell the news. That was very clear, and I mentioned to you guys here several times, you wait for it to have a pullback. And I didn't know how far back it was going to pull, but we did mention that there's this demand zone right here, which it came right into, tiptoed into it, and since then ripped out. Now, its first rally, after about 5 days after hitting that demand zone, it rallied up aggressively and then started to roll over a little bit. Okay, well, at that point, and we'll play the hard red edge. At this point right here, you don't know which way it's going to go. It actually doesn't feel like it has any clear direction. You've had some ups, some higher highs, some lower lows. At this point, you don't know. So for me, we had talked about it breaking this high from January 20th, which is 44,255. And we rallied above it that day, and now all of a sudden, we're screaming higher. And notice how each day those candles are getting bigger and bigger and bigger. It's 4 days in a row of each candle getting bigger and bigger and bigger. That's momentum of buying coming in. More people are jumping on that bandwagon, trying to buy Bitcoin and lock it up. I think that this has a lot to do, again, with the expectation of the halving, also hearing that some firms are now considering putting stuff on their balance sheet. I was going to do a little report for you guys for next week if my schedule lightens up a little bit and look at who is looking at adding Bitcoin to their balance sheet because I think that's the big game changer. Now, what's interesting is we've had issues at this $48,000 level here for the past few months, right? Have not been able to get above it. Well, we got above it, but we didn't close above it. We may see by Monday a close above 48,000, and then after that, you got to step back and look at this weekly time frame to see where we're headed. Right now, if you see where this price chart is, we hit our heads back here in April of 2022 at 47,610, and the week before that was 48,475. Once we get above that, there's one stopping point at about 51,000, and after that, I think you're now looking at 65,000 again. And I personally thought this would go a little bit slower. I thought that this would take a little bit more time. I was, again, expecting that the real rally would start in November of this year. However, I think the spot Bitcoin ETFs changed the dynamic. I think they changed the dynamic of Bitcoin adoption. And my major flag has been adoption for Bitcoin. The more people use it, the better. And that will drive price because you have fixed supply. So Big Eb says $50,000 in March. I would absolutely take that bet. I pretty much can almost guarantee we'll be in 50,000 by March. I mean, look, we're $2,300 away from it today, and it moved $2,000 today. So, we could be there by the end of next week, right? Get a little Valentine's Day love for Bitcoin. The question is, do we get 60,000 by March? Because now you're getting people putting it in their 401ks. Now people are buying these spot Bitcoin ETFs saying, hey, I can now put them in my IRA. That changes the consumption patterns because those people are buy and hold investors now. So you got people who have an IRA, and you had to go through a special Bitcoin IRA, which was shady. I didn't trust them. But now I can just go buy BITO or BRR or these different spot Bitcoin ETFs and throw that in my retirement account and now hold Bitcoin. And typically in a retirement account, you're not actively trading. It's a buy and hold thing. So now you're taking more Bitcoin essentially and removing it from supply. So to me, it creates a very good long-term prognosis for Bitcoin going here. The only wild card would be either, number one, there is a hack of SHA-256, right? That would be detrimental. The other piece might be that Satoshi Nakamoto actually moves his wallet and you see that it's live. That could cause people to panic and freak out. The third one would be the government comes at it and tries to shut it down, but I think that would be a stupid political play. Just ask Elizabeth Warren. I think she's losing a lot of voters because of her stance on cryptocurrency and digital assets. My Bank Huntington won't let me buy crypto. I bought Fidelity, FBTC. I'm not a financial advisor, Miles, so I can't say if that's advisable or not. But if you felt like you wanted to buy Bitcoin and have exposure to it, again, there's several different ways to do it. The first and best way is to buy Bitcoin on an exchange and then move it to cold storage where you keep the private keys. Number two, I would say, is buy it and keep it on one of the exchanges like Coinbase, Kraken, Binance. The third choice would be what you're thinking of, is going FBTC and buying, Fidelity's Bitcoin product. I think that's fine. You just know you're paying, I believe Fidelity's is a 0.29% management fee. That's not that big of a deal. It's small. But yeah, I think that's a nice way for you to get exposure to Bitcoin and hold it. So sure, if you think it's going to go up over time, then that would be a logical play. Let's go FBTC, just look at that chart. It's going to have horrible looking data. Let me go back to the daily time frame here. The data doesn't look good because it just doesn't have a lot of data, right? But you're seeing those nice big jump up. Notice that you don't get 24-hour trading with this, right? You don't have your 24-hour trading, so you're going to get lots of gaps on this ETF or this spot ETF. But yeah, if you want to own Bitcoin, I think that's the way to do it. How do you find intrinsic value? That's a tough one, Jimmy. You could make the argument, so each crypto has different pieces, in my opinion, that give them value. With Bitcoin, it's the medium of exchange. It's its currency value. It's its scarcity that gives its value and demand for it. If people realize that you can't extract more and make more, that gives it scarcity. The reason I think it has intrinsic value is the amount of energy it takes to produce one Bitcoin. Right now, a lot of companies are struggling because it costs them more than $47,000 to make it to buy all the mining equipment and extract it to solve the blocks. So, to me, with Bitcoin, the intrinsic value is its production cost. Like, how much does it take to produce a Bitcoin? Well, you can measure it. It's easy to do. You can go to Riot Blockchain, look at all their overhead costs and how much it costs them to run as a business and how much Bitcoin they get for it. That tells you what it costs per Bitcoin. So if Bitcoin is let's say it costs Riot Blockchain $45,000 to quote unquote make a Bitcoin to get it from the system. What's going to happen there is if Bitcoin drops below 45,000, Riot Blockchain at certain points going to shut their doors and say we're going to turn off our equipment until it gets back up above 45,000, or find ways to cut their costs. So that's the intrinsic value for Bitcoin at least. With things like Ethereum, it's the utility of the network, the functionality, and what business ventures and what things can I do on that blockchain. Someone asked me here, do other cryptos have? Yes, they do. So, for example, I think Litecoin. Litecoin is just a fork. It's a copy of Bitcoin, and they change some of the numbers. But most don't. Most are going to do what's called just a token issuance. And they'll do a pre-mine, which says all of the tokens available are created at once. All of those projects have one big major risk to them, and that's the fact that they can, at any point, go and create more. They could just simply go and create more tokens, and that to me, it loses the appeal of some of those other cryptocurrencies, which is why Bitcoin's my number one. With Ethereum, if they wanted to, they could create an unlimited amount of Ethereum if they wanted to. Now, it's built into the code that you get 2 Ethereum created every 15 seconds for the well, it was for the miners. But yeah, they're the only one. Bitcoin, Litecoin, there's a couple others that do a halving process, but that's when you have a predefined emission schedule over time. Let's see here. Let's go talk to Merlin. With the S&P up there, where it is this a great opportunity to use Fibonacci retracement lines? Yeah, you know what? Let me go to this question here. I had a good question that came in on that topic. Let me see. Alex says, so when market's at all-time highs, how do you find supply zones? Well, you don't. You don't find supply zones when something is at all-time high. You have to extrapolate, right, and kind of assess as to where might it turn. So let's go look at the S&P 500 here real quick. And, you look at this. Let me zoom out a little bit. Right, you look at that chart and you're like, okay, well, how the heck do I know where an all-time high or where it's going to turn? You don't. You have absolutely no clue. And you may think you know, you don't. The reality is, when you have a market that's searching for an area where there's going to be sellers, if you see it historically on a price chart, that gives you an advantage, right? Especially if you have the tools to evaluate those levels and say there's a lot of sellers here or not. In a situation like we have with the S&P 500 right now, and this is for Alex and anybody else that's interested in it, there's a couple things that I look for. Number one is going to be numbers, whole numbers. I've done this experiment with you guys before. I think I've done it with you before. I'm pretty sure I have. I'll just do it again because it helps the chat results. Type into chat any number you want. Just pick a number and type it into chat. I think it actually helps my chat engine over here. Yeah, type any number into chat that you want, and I'll take a sip of my whiskey while you guys do that. All right, 197.75 for Chris. Come on, I got a bunch of people in here. You guys should all be scrolling. Numbers should be flying across that screen. The reason I think that this is an interesting experiment is you guys have all been part of my community for a while. Most of you have been part of my community for a long time. And what that to me would entail is you understand the question of where I'm going with this. Most of the time, people will put in whole numbers. They're going to type in 17, 11, 7. This is how people think. So if you look at this chart of the S&P 500, I'm not thinking that people are going to sell right now at 5,044. That's just not a good one, right? What will happen is it's going to be whole number psychology. And this is a lot of what David Warner talks about too, is his whole numbers. So right here, 5,100, that would be a big whole number for me. 5,200. Big whole number for me, right? Those round century marks are always important. So that's how I'm going to look at initially is thinking, where do people psychologically think that it's going to turn? And it'll turn at whole numbers. And a lot of time it does, right? When you guys put in a stop loss, let's say your target on something is $200 per share. Well, if you put in 200, you're selling right as everybody else is expecting it to go the other direction. You might not get filled. So you could do what Chris did, which is say, well, 197.75. I'll sell right before it gets to that overhead supply zone. To me, that's one way to look at these potential supply and demand zones going forward is I don't know if there's anything there. However, I know that humans think in whole numbers. It's prevalent throughout any asset class you trade. Just look for whole number psychology. It does work. It's not guaranteed, of course. Now, the other piece is I'm a big fan of Fibonacci just because I do think there's something mystical about it. It's hard to explain exactly what it is. I like to use Fibonacci retracements, but there is another tool where you can use Fibonacci-based extensions. Now, this becomes much more difficult. Typically you do something like this. Oh, this is a really tricky one. You'd say this big move here, rallied to this peak right there, and then sold off to here. This now gives me targets as to where it may turn going forward. And you'll notice it's giving me a bunch of colored lines over here. Let me see if I can move this down. Come on. Right, so that actually was forecasting a 2,454 would be one potential target, and it already broke through that 5,000 one. Another way you could do it is, and this is where it becomes very subjective. You're supposed to go from, with an extension, you look at the most recent move, followed by the biggest pullback in there, and then that will give you expectations about where it may go. And in this case, it's forecasting right around 5,064 on the S&P, and I would look for confluence. I would look to things line up at numbers that I'm interested in. Like, does it line up with 5,100? Does it line up with 5,200? But these are some of the tools that people use, Alex, to help forecast or anticipate where those sellers may come into place, because a lot of people are using Fibonacci extensions. However, in this situation that I just drew here, how many people are going to draw it from the exact same spot? That's where it becomes difficult. You know, I could draw it from there. I could draw it from here. Hold on, I'm going to read the whole shebang here. All right, I could draw it to these levels here, and all of a sudden, I'm getting a completely different set of numbers. So this is the challenge I think a lot of people face is, yes, I'm going to use Fibonacci extensions to give me an idea as to where it may go, but I also have a challenge of I have to do it where most people are drawing it. That's what makes it work, right? It's group think, it's group psychology. So the more people that see the exact same thing, the more likely those numbers are going to work. So I know, Alex, it's not the definitive answer that you wanted. It's not saying clearly this is where it's going to turn. Nobody knows, right? We're all guessing at this point and anticipating. The safest thing to do is wait for it to roll over and establish a supply. That's the easiest thing to do, but a lot of people want to time that and pick the top. I'm in that camp right now. I'm a bit more aggressive, kind of in my gamble account. I am going to be taking some shots here soon. I was actually thinking about buying some leaps on Nvidia, just playing for that black swan event. Yeah, I think Nvidia will continue on up, but I think it's would be an interesting play to play a black swan event for Nvidia. Yeah, we'll see. It seems to be a melt up. Absolutely, Andreas. It absolutely is. It's a melt up that I don't see anything right now that's going to cause it to stop, other than some external event that is a shock to the system. We all go, oh crap, I didn't see that coming. Hopefully we can, we'll see. We'll see what happens. All right, let me see what it got. But let's see. Let's go. Big up. Oh yeah, your GBTC. So let me bring in this one here. GBTC. So this was a formula we had in for quite some time here, divided by BTC times 1,000. Right? So what this shows you is, whoa, that's interesting. Tom, I have no price axis. That's weird. There should be wow. GBTC. Oh. Yeah, of course I messed it up. That's why. 1 second, guys. Let me fix this. So what I'm trying to do here is, we all know that GBTC is supposed to be 1/1000th of a Bitcoin. I'm going to divide that by BTC USD, and then we're going to go times 1,000. There we go. So this should show you. No, this is not it either. No. I got the wrong thing here. Let me make sure. Yeah, I think I got the formula typed in wrong. But it was showing it a premium for a while, and then for the longest time it was showing that it was trading at a significant discount. It actually feels like this is still trading at a discount, but it's not what I was used to. It was showing in dollars before, which is weird. GBTC times, huh? Yeah, I'm not sure why I'm not getting the right piece, but this is, as you can see here, it's been on a tremendous run, and I mentioned this a year and a half ago that if that spot Bitcoin ETF gets approved, then GBTC is probably going to go back up to parity, and that discount is going to close, and it'll go right back to the price it should be, and that's what Tom's pointing out. He says right now it's trading at an 89% discount, as we expected, as low as 45% a year ago. That would be the ETF I would go with, as it's likely to bounce 11% into the BTC exposure. So while Tom is right, you look at this low point here when it's trading at, I guess this is a percentage discount, so 45% less than Bitcoin. That's crazy. 45% discount to Bitcoin. Right now, it's only an 11% discount to Bitcoin. It's closed that gap, and it will probably get up to the point where GBTC is right back at this 1 mark. 1 being it's the same price as Bitcoin. Now, one thing to remember with GBTC is it has the highest level of fees of any of the Bitcoin ETFs, 1.5%. So that certainly is something that if you are a long-term holder, you have to offset. You're paying considerably more with fees for GBTC as you are for some of the other spot Bitcoin ETFs. But yes, I do think it's going to get back up to that parity. Yep, and that is it. 11% discount. Yeah, I just remember before, Tom, it used to say like in dollars, it would say, oh, it's a $4,000 discount. So I'm not sure why it did that. My previous version would have the dollar amount. So you could see it's $4,000 discount or $10,000, but I'm not sure what happened there. Do you use the defaults on the fibs? I do. Yeah, I do. I use the defaults on that. So you go here to the Fibonacci tool, right? You can, when you draw it on there, click, whatever. If you double click on it, you can go and change the settings. Right, these are the different settings. So the common fib numbers are 38.2, 618. Those are the two real fibs. A lot of people like to use the 50%. That's not a fib number, but it's half of the range. And then there's some others. The 23.6 and the 78.6 are the more common ones. Now the extensions are these ones down here: 1.618, 2.618. Those are the ones that a lot of people focus on. But yeah, again, I am not making my trades off of Fibonacci. It's just an expectation. If I can find that line up with some other piece of information, give me confluence, where I have multiple technical analysis pieces, if you will. Maybe it's a price level of 5,000, lines up perfectly with the Fibonacci extension. All right, there's more people that are going to think that that's where it's going to turn, because the whole number psychology, because the Fibonacci, and maybe some other things would cause me to think that that specific level would be the turning point. But does GBTC hold 100% of Bitcoin, or is it other crap? And they're like, from my understanding, it's all BTC. It's straight Bitcoin. That was the deal early on. It's a straight Bitcoin trust. But I'm not 100% sure on that one, Big Eb. But from my understanding, what I've read, it is. So we'll see. And you're talking like the Bitcoin futures, right, which have government bonds in them. It's like, no. If I wanted government bonds, I'd buy government bonds. I'm buying a futures ETF for Bitcoin because I want Bitcoin exposure. Kind of strange. Cool. All right, what other questions I have? I got a weird question, which I really don't know how to answer. Maybe we can do this as kind of a wrap up, and then I can go. It's going to be a fun evening tonight. I'm going to try to go have some fun. The question was this from Marcel, and I'd like you guys to participate in this one as well. And there are no wrong answers here. I'm curious what you think. So in chat, go ahead and answer this question. If you had to buy one stock, what would it be? But just tell me what it is and why. Doesn't need to be too much of a depth explanation. And we'll look at those real quick and see. So Marcel asked me, if you had to buy one stock, what would it be? And it's a really tough one for me to say. There's a lot of companies I like. Like, I would like to own NVIDIA, but there's no way I'm going to own NVIDIA at these current prices. I want to buy it much lower. And I guess I would have to ask if this was the only thing that I could buy. Like, if it's just all my money was put into one thing and one thing only, I'm going to sound like a total chicken here. But if I had to buy one thing and one thing only, it would be SPY. I'd buy the S&P 500. Because if all my assets are in one thing, I can't take the risk of buying an individual stock. I can't take the risk of buying things like, yeah, Chris says Merlin likes Apple. I can't take that risk of buying Apple. Apple's a juggernaut right now. They are the king of kings in their space, but times change. Look at General Electric. Years ago, General Electric was the biggest thing in the world. And now it's like, it's ridiculous. It's not really doing what it should be doing. So I think these things change. I personally would go with, it's a total cop-out. Ken says Bitcoin. That's not a stock. That's not a stock. No, stock would be the ETF. So ETF to me is a stock. I consider a stock. So I would go with SPY. Now, if I could diversify around and maybe add something to my holdings and not all my money would be in it, I would look at some of the AI ones. I would look at some of the, I'd be kind of interested in the miners, but I think miners are going to have a big problem here starting in March. I think these cryptocurrency miners are really going to struggle because the cost to extract Bitcoin is going to get much, much more expensive, which drives the price of Bitcoin up, which again is why I think you'll see it at $60,000, $70,000 by the end of the year. Tom says MicroStrategy. Interesting. Oh, Jimmy has got a good one. It's hard to go wrong with Berkshire Hathaway. I mean, really hard to go wrong with Berkshire Hathaway as a long-term hold. I think I'm streaming delayed. No worries. SPY because it's designed to go up. Right, Lisa. That's exactly right. And I know that I'm missing out on the big percentage gainers, but I'm also missing on the big percentage losers. So if it's a question of over time, I'm okay getting that average rate of return of 8 to 10%. Not exciting, not flashy, but that's what I would do. You know, and I would say this to any of you who have friends that are like, oh, I'm afraid of the stock market. Then just buy SPY. Right? If you have money sitting in a checking or savings account and you're earning almost nothing on it, you're getting nothing. It's better to hold it in something like SPY. Now, granted, buying SPY right now may not be the wisest choice. But if we get a period of time where the market drops another 20%, over time, you're probably going to do okay buying these things on big pullbacks like that. So I would go SPY. What else do we have here? Microsoft. Again, it's hard to knock Microsoft. They are the titan in the space right now. I like what Tesla is doing, but I want exposure to SpaceX. Right? SpaceX is the one I think is going to just blow the doors off it. If we get to the point that they're dominating interspace, shipping and travel, that's going to be the most expensive stock in the world. But we're not there yet. Let's see what else we got. IWM. Okay. So Mike, you're going a similar route with me, right? You're saying I want something diversified. I want that diversification. That would be, I like that as well. So I would personally pick, for Marcel's question here, I'd go with one of the diversified ETFs. Now, SPY is the broadest measure, other than looking at something like the Wilshire 5000, which is the broadest measure. I would go with SPY. My second choice would probably be the IWM, go with the small caps. Third would be the NASDAQ. And Dow, I don't know. I wouldn't do it unless I wanted to pick a specific sector. So I hope I didn't seem evasive on that one. But you can see I need more variables there, Marcel. If it's just I have one to pick and that's it, I'll go with SPY. Hands off, go do whatever you want to do. And when you see a 20% pullback, buy more of it. That's pretty much it. Oh, John says BlackRock. So it's an interesting point. So BlackRock, let's go just look at Goldman Sachs for a second, right? So Goldman Sachs, this used to be one of my favorites. We used to call it Government Sachs. I'm going to bring it up on a weekly time frame. So if you go back into, oh wow, this only goes back to 2000. Goldman Sachs obviously been on a huge, great move over the decades. However, if you look at percentage rate of return, there was this huge sell-off, and it feels like it kind of broke Goldman Sachs. They are no longer the elite powerhouse that they used to be. It seems like they've kind of lost their prowessness in the financial markets as being the kings of kings. So, Goldman Sachs, while it's still moving up, lost its way to BlackRock. And you can just tell by this chart that something's different about BlackRock, right? BlackRock has just taken over as the leader in the financial space, and they've got so much influence and people connected to all the different public offices, elected officials, businesses. BlackRock is connected up on the high hill with the devil himself. So you look at BlackRock, I agree with you, they're probably going to stay there. But as we've learned by watching every nature video that you've ever seen from the moment you were a child, what happens? You have the alpha male of the pride, right? The lion. And he's the king, right? Nobody messes with that lion. But over the years, that lion starts to slow down a little bit. He gets older, and some new young buck comes up and takes that guy down. And all of a sudden, that lion, which was so proud and regal and dominated his pride, is no longer, and they're outcast, they're banished. That's my worry about single stocks if I hold them long term. Now, granted, BlackRock will probably do okay, but does something else jump up? And when asked that question of is something else going to jump up, the answer is yes. And it's a question of what form does it come in? So for example, right now, BlackRock is the apex of traditional finance, in my opinion, right? There's others out there, but apex would be, in my mind, BlackRock. But what if over the next decade, 20 years, digital assets become much more prevalent, and a small new startup company that specializes in digital assets and the digitization of real world assets starts to take over the lion's share of this, and people move away from the traditional models that BlackRock represents, moving more towards digital. You could see how very quickly BlackRock could lose their power, and this new market segment, which could have exponential growth, takes over. Now, it's too hard, at least in my opinion, to focus and find out what that new company would be specifically, which is why I went with the S&P. Right? Go with the S&P because the S&P will see it and they'll make the changes to and they'll incorporate these companies into the S&P 500 or the Russell 2000. So there you go. Do I watch commercial real estate mortgage performance? I do not. But if you find interesting stuff on it, Sly, let me know. Send it to me. I'm happy to check it out. You could always consider SGIM, the inverse Kramer ETF, for your single stock. I heard they're actually discontinuing SGIM. I know. It's terrible news. Terrible, terrible news. Well, I mean, look. It's telling you that Northern Lights inverse Kramer. So obviously Jim Cramer's doing something right now. Of course, it's because the markets have been on a very bullish move since October. Yeah, SGIM is not doing so well right now. Jim Cramer's loving it. SGIM is down almost 20%. Oh, gosh, I love Jim Cramer. Yeah, but I read somewhere they were going to discontinue this one. Fun fact, the Stanley and Morgan Stanley was a son of steel thermos maker. Yep, I know. Yeah, I did know that. That's a funny one. Now, and it's funny how all of a sudden, how things change and how quickly they change. You guys remember Yeti? The little Yeti cups were like the kings of thermoses, right? Like Yeti is what it's all about. And then somebody had a drink in their car with ice, and the car caught fire. And when they went to, clean up the car after the fire, their Stanley mug was in there, and it still had ice cubes in the cup. And everyone's like, "Oh my gosh, you got to buy!" And they did a commercial. They sent it like a YouTube video on this thing, and all of a sudden, Stanley is now taking that, and they're everywhere. It's now like everybody's got to get the Stanley. People are waiting in line for Starbucks to get the custom pink Stanley mug for $50. Like, all right, I'll go to the 99-cent store and find one for $10. It'll keep my drink cold for an hour. Really, do I need a thermos that's going to keep my drink cold for 24 hours? If it takes you 24 hours to finish a beer or a cocktail or a juice, you got a drinking problem. Finish it. Move on. Anyway. Big F says, heck, I'm buying calls on SGM. It might be a play, buddy. Buying calls on SGM might be a play. Let's see. I got nothing on SGM on my TV. Cool. All right. I read it somewhere, but maybe I don't know. I read too much stuff. Okay. Head of marketing for Stanley, the guy that reviewed Crocs. Crocs. Those are a joke. All right. Let me wrap this up. There's nothing. Actually, there is stuff happening on Monday. So let me bring up your Monday's economic calendar and earnings calendar, just so I can have that all ready for you. As far as this weekend go, I didn't see anybody that wanted to bet with me. If you do, email me. I'll email me at TraderMerlin@gmail.com. I'm happy to take pretty much every bet. I mean, I'm not gonna do like $10,000 bets. Come on, but if you want, I don't know, trade you for jerseys, you got to wear the Niners jersey. If when we win, you have to wear the Niners jersey. Okay, we'll do that one too. Here is your economic calendar for next week and earnings. Boom. So we'll start things off with the earnings calendar. There are some decent names next week. Not really on Monday. You've got Arista Networks. You've got Waste Management and Cadence Design Systems. That's pretty much it. You also have Principal Financial Group. And then really on the economic calendar, not a lot going on. There is some stuff near the middle of the week. So Tuesday, and you get CPI, which can be a good one. There you have your U.S. markets. You have FOMC members speaking, but really no major economic data happening for Monday. All right. If you short SGIM, then I guess that means you agree with him. Correct. Yeah. Is there a bullish Jim Cramer one? There's probably a bullish one as well. They probably had to do a bullish one, one that matches his calls, and then one that goes inverse. All right. Thank you for all the Niners love. No Chiefs fans out there? If you're Chiefs fans, let me know. I'll put some skin on this game. All right, everybody, that's going to do it for me. Cheers to you all. Thanks for a great week. Hope you are going to have some fun this weekend. Enjoy that Super Bowl. We'll have either... if I cancel the show Monday, you'll know what happened. No, I'm kidding. I'll do the show. They should never have a Super Bowl on a Sunday. Always a problematic thing. Anyway, cheers to you all. Have a fantastic remainder of your day. I hope you have a great weekend. If you want me to cover anything for next week, let me know. You can email me at TraderMerlin@gmail.com or put down comments below any of the videos, and I will see. Big Eb says Purdy was the last QB picked in the draft. Yep. He's Mr. Irrelevant. He's Mr. Irrelevant, and people are like, they're going, oh, well, he's no Tom Brady. Look, Tom Brady didn't get good till his 5th season in the NFL. This is his 2nd season. He's in the Super Bowl, and he would have been in the Super Bowl if he didn't blow out his elbow in his rookie year. It's pretty impressive. Anyway, I'm going to turn this into a sports show if you let me. Cheers, everybody. Have a great weekend. I'll see you Monday.